Good evening, ladies and gents. I think we are live. You should be able to see my screen. We just flick through some slides. Yep. See my face, hear my voice, everything you need to be learning this evening. Let me make sure I am on mute on my phone. That's always a good move. Okay, where are we? We'll start in a few minutes. We are chugging along. It only took a couple of bunker buster bombs for us to get going. What a wild, wild world we live in. I'm not alone the market to be a trader. What a wild world we live in. Trump is dropping bunker bombs and F bombs today, if you noticed. I shouldn't joke about this type of stuff, but hey, if you don't chuckle about these things and the way that's approaching the markets, you go mad. Special shout out to a trader who's probably logged on right this second. I know he's been long Nasdaq for about 800 points or so. So yeah, fair play to him. He's squeezing this for every single drop. So credit to him. Hope you guys have been managing your risk in this. Crude has been all over the place. Obviously, markets have been all over the place. Big mega reversal yesterday on the NQ. We sold off heavily when we had the Iran retaliation, only for the market to go, hang on a second, if that's it, we're happy with that. And it just suddenly rips the upside. So this is the world we're in. And I didn't even talk about Jay Powell's testimonies there, which actually made me go to sleep, but as always does. Anyway, today we're going to kind of cover some really interesting things that I think you will identify with, and hopefully you'll go away with one or two things that will help you move forward in your trading. If you can't hear me for any reason, just know, you know, guys normally pipe up and say so, but I think we are good. Nasdaq is chugging along. We are still a little bit away from all-time highs. Could we do it today? Ooh, I don't know. I'm looking at the Qs actually, because if you look at the futures or the CFD contract, you tend to get a little bit of a skew. It's close. SPX is reasonably close. Dow lagging, and poor Russell. Nobody loves the Russell. The poor Russell's very, very underloved at the moment. Tech is leading the way. Although little algo kicked in maybe now. Let's see what happens. As normal, as we do these webinars, the market often sells off. It's become the latest indicator, if you don't know. So whoever's long at the moment, be warned. All right. So today we are going to talk about mastering the innate. By the way, welcome. Welcome to this webinar. I'll introduce myself in a moment. Let me tell you what we're going to discuss today. Slightly different format to normal, but I think you'll like it. And as it's the last in the series of the month, I'm going to do a bit more time for Q&A. So if you have any questions related to this, related to other stuff, feel free to drop them in the Q&A. We'll get to them at the end. Try to get to them in order. Okay, so we'll talk about today mastering the inner game. I know this is overused, right? It's a cliche. Discipline, mindset. It needs to be trading psychology. It's a broad term that covers so much stuff. And today I want to dig into what I think are the 10 most common challenges and almost do like a lightning round, right? So we go through, and the idea being you think, hang on a second, that's probably me. I've not heard of that potential solution before, and use it and go away, and it helps you with your trading. And also, as I say, at the end, we'll do a Q&A to kind of dig into stuff deeper. So if you've got a specific thing you want to talk about mindset-wise, then we will do this. So yes, trading psychology, very, very broad, and that's fine, right? That there's some broad rules of thumb that we should absolutely follow as traders, regardless. We should be staying disciplined, we should be staying focused, we should be getting good sleep, we should be as on point as much as we can, we should be preparing, and we dig into all that kind of thing, right? That goes without saying. But I think that we can go deeper, and I think that the name of the game for taking trading to the next level, the next station, wherever you may be now, whether you are brand spanking new, whether you're developing, whether you're coming out developing stage and starting to put some good numbers on the board, wherever you wanted to go to next, the next checkpoint, I think it's really identifying the key challenge from a mental aspect anyway. Strategy is completely different, but from a psychology perspective, from an inner game perspective, from a mental perspective, it's identifying what are the little areas that you sit in that you need to combat. So we're going to do that today. And so we're going to do like a lightning round, if you like. Great quote here from Mr. Paul Tudor Jones. In trading, you need to be decisive and nimble. Hesitation is a recipe for regret. Okay, today 10 trader types. I've picked what I think are the most common 10 trader types that quietly kill performance. And what I mean by that is, are you one of these 10? Can you identify with one of these things? And we're not here to categorize you and put you in a box and say, oh, you're this type of trader, you're the over trader, you're the over leveraged trader, whatever it might be. We're here to say, hey, listen, which is the biggest challenge you have from the mental side of trading? Let's put the strategy to one side for a moment. And by the way, when I do this, and personally, I like to separate things out, not because I think that's the way forward. I think you have to have the right blend of strategy and psychology. But I think to identify the challenges and overcome the challenges, it makes sense to strip back all the other things and work on one thing at a time. I've always been a big advocate of that. It's something that's helped me in my 25 years in this business. It's helped many traders who I've seen develop and I've helped develop, as well as stripping stuff back. Let's deal with that first. Let's deal with the most pressing matter. And for many traders, it is the psychology, it is the discipline, it is the mental aspect of trading. Right. And it's not a be all and end all, doesn't solve all problems. We still need to have an effective strategy, but ultimately identifying the roots of the challenge, the root causes of the problems, and then coming up with solutions to solve it. Okay, so how you can spot your own kind of self-sabotage loop, if you're the type of trader who has this self-sabotage, who constantly makes his mistakes and is often wondering, well, why the hell did I just do that? I don't get it. I don't understand. Why am I doing this? Why am I behaving like this? Hopefully we'll shed some light on that today, and some simple drills, mental and physical actually drills, to help break the cycle. There's no point in saying, oh, this is the type of trader I am, I overtrade or I revenge trade, and just going, well, I won't revenge trade. That does not work. Just saying to yourself, I won't revenge trade, I won't break my rules, I won't do this, I won't, does not work. You probably tried it. We've all tried it. We all think, well, I'll just say to myself, I won't do it. And then you go into Monday morning, go the next day, and you do it. And you go, why have I done that? Why have I just done this? And so we're going a little bit deeper, and we'll kind of come up with some ideas and ways and suggestions to help you overcome some of these challenges that you might have from a mindset perspective, and hopefully building this real pathway to kind of building something sustainable and building the confidence. A lot of trading comes from confidence. It comes from confidence. It comes from the process, and we need to try and build that. Because before I go into the disclaimer, this is important. For many traders, they know what they need to do, what needs to be done, you understand the game, you have the knowledge, and the gap just becomes so much wider from the knowledge and actually putting the rubber to the road. And a big chunk of that gap is confidence. And why the confidence is often eroded is because you say to yourself, I'm going to do X, I'm not going to overtrade, I'm going to stick to my plan, I'm going to hold a trade to the final target, I'm going to, whatever it might be. We can sit here all day sort of seeing these common things that, as traders, we all suffer with. But then when you don't do it, all that does is erode a bit of confidence. It just chips away, or if I like to call it, it just takes a withdrawal from the piggy bank, the confidence bank, and then you have no confidence left. And so this isn't a webinar about confidence. I promise you we've done this before when we're talking about deposits and withdrawals. But the point is, if you are just looking in the mirror and say, I'm not going to do this, or I'm going to do this, and then you don't, you erode your confidence. So we need to have some sort of strategy, some sort of way that we can do it to build our confidence back up. Okay, so before we move on, let me remind you, ladies and gentlemen, please, if I may, if you're trading on leverage, you're trading with margin, you're trading spread bet or CFD product, I'm obliged to say, and I would say anyway, because I hate to hear of people losing because they didn't understand the nature of the product or the instrument they're trading. Now, if you take a trade, doesn't work out, that's the name of the game, right? Losing is part of the game. No one has 100% success rate unless they're on Instagram, of course. Then there's 100% success rates everywhere. Joking apart, no, please understand the risks of trading on leverage on margin. Please appreciate how they work. Open a demo, play around with it, make sure you can afford to lose the money that you put on margin, and just being aware, there's huge upside potential, right? But that comes with downside potential. Double-edged sword of margin. Things going your way, great, fantastic. You're leveraged up, you've got a big position, it feels great, you're making good money. but it can happen fast the other way around as well. You don't want to be the deer that freezes in the headlights. We try and manage risk as best we can with stops, with position sizing, with understanding where the headline risk is coming from, understanding where the slippage risk is coming from, the overnight gap risk, all the risk elements we try to appreciate, but we can never eliminate risk completely. And why would we want to? Because that's how we get the potential big rewards, because there is risk involved in it. And sometimes the risk is high. But if you understand that, then fine. But I just want to make sure that everyone knows what they're doing before we move on. Okay, so very quick reminder. I know groaning people have watched this many times before. I'll give myself 30 seconds. My name's Mark Holstead. Pleasure to meet you. I haven't met you before, virtually, of course. Hopefully see your questions in a moment. I've started trading in 2001. I have some decent experience. I don't have all the answers. I'm not here to tell you how to trade. I'm not here to say do this, do that, and you should absolutely listen to what I say. Absolutely not. I have seen traders come up through the ranks who do very, very well. I've seen traders come up through the ranks who struggle. So my perspective is one of my own experience and from observing others, studying great traders, not studying per se, but being around really good traders, being around developing traders, helping developing traders, and all this type of stuff. So that's where I come from. The perspective I come from today is not as a know-it-all, not as someone who you should listen to for everything. Just take some ideas, run with them, decide if they're any good for you, and take them with a pinch of salt and use them as a seed of an idea to maybe develop into something that helps you with your trading. By the way, I think you should do that anyway. I think that's the path to greatness as a trader, is to take bits from everywhere, whether it's one of these books from the Market Wizards, Tom Hugard's book, Al Brooks's book, Steve Ward's, all these books, content you see online, and go, you know what, I'm just going to take the bits that I need and then use them to develop my own style, my own strategy. Whenever I've seen traders that are doing very, very well, that's exactly what they've done. Okay, so let's go straight in with the 10 trader traits, if you like. And by the way, the idea here is, when I say we're going to fast track through these, and what I want you to do is to make notes of the type of traders or type of the traits that you see in you as a trader. So as we go through, we'll see the title, the name, in this case we've got the hesitator, we'll talk about in a moment, problem, root cause, and then we're going to have a slide, we'll talk about potential fixes and cures, if you like. And what I want to do is make this a little bit more interactive today, in that you write down, hey, I identify with 3 or 4 of these things. And who do you identify as? I identify as a few of these things, and I want you to then go, okay, this is my biggest one, and how am I going to solve it? And so at the end of the webinar, hopefully you'll have a few ideas to take with you. Hopefully you'll do a few more in the chat as well afterwards, the Q&A afterwards. And the goal being, you grab the one that you think is the most pulling you back like an anchor. For God's sake, man, my strategy seems on point. I can get the market direction. My thesis is good. My triggers are good. But for God's sake, I just keep messing up. That's the one thing. If you get that today, that's a massive breakthrough, because even if one of the suggestions I say doesn't necessarily resonate with you, at least you can dig into it and go, identified that now. I can work on it and try and find a solution. Okay, let's get cracking. The hesitator. As he says, as it sounds, the problem is always acting too late, if at all. Many traders see the trigger, see the setup, and don't even take it, or they hesitate, pull the trigger a little bit too late, second guessing themselves, missing clean trades. And the root cause of this is, my understanding, my interpretation. And everyone's different, right? Everyone's got different personalities. Everyone approaches things in different ways, different net worth, different acceptance of risk, different ways they like to trade. I think this comes from a fear of being wrong. And you're really there thinking, you know what? I don't want to take this trade because I don't want to be wrong, or I don't want to lose money. And that's a really big challenge as a trader. And not always, but for most of the hesitating traders I see, it's that. Now, the first thing to do before we go into kind of a little fix is to really make sure you have defined your setup, your plan, your strategy. Because a lot of traders come to me and go, Mark, listen, bro, Mark. They don't say, many of them don't say bro unless they're under 20, right? They say, Mark, listen, I hesitate, I struggle, I'm not pulling the trigger. And the first thing I say is, well, stop. Do you have a plan? And they'll go, yeah, of course I do. Okay, fine. You've got a plan. Good boy, good boy. Right now, do you have a really detailed flow chart or process for when you get into a trade? Well, I try to trade reversals. I like to see when markets extended. Okay, fine. Now, you may not want to trade like this forever, but if you are trying to fix hesitation, before we go to any drills, any kind of routines to go through to secure that, the first thing you must do is to distinguish the difference, or to differentiate, is a better word, between hesitating on a setup you know you should take and you've said you'll take, versus looking back and saying, oh, I hesitated on that, when it wasn't really something you planned on taking. You're just beating yourself up about it in hindsight. Example, let's say yesterday when we had that real big sell-off on the US markets, and then it rallied hard. You're like, oh, I hesitate on that. Well, was it a trade? So what I mean by this is defining your setup and plan, right? Defining, hey, I will take a trade when we break below, I'm going to make something up here, break below the prior day's low and come back through that prior day's low in the first hour of the regular trading hour session on the NASDAQ, for example. I am going to take an Asian range session breakout on dollar yen if it does it in the London 8 a.m. till 10 a.m. for example, right? It's very clear. There's no room for ambiguity. Now, if you then see that market break out of that Asian session range, and again, define your Asian session range, define this, define that, define everything. If you then don't pull the trigger when the price breaks that Asian session range, that is definitely hesitation, and we can deal with it. However, you have to get to a point where you've defined what you're going to do first before you can say you hesitated. Otherwise, you're looking at the price going, oh, I hesitated on buying that extension there. That's momentum. Well, maybe, but you can't beat yourself up on it because you hadn't planned it. And when we're digging down into the roots and the problems and the challenges, we have to be very precise. Now, as I said, and I want to reiterate this, it doesn't have to be the trader you're going to be. There's little precision when you start to move up through the ranks. It's very, I was chatting to a trader yesterday about this, trading is very imperfect, right? And that's the beauty of trading, and that's where our edge lies. So the precision is fine to diagnose and to cure. Then after that, you can loosen the reins a little bit. Okay, so to make sure you've got a setup and plan, make sure you understand what you're trading, how you're trading, when you're going to pull the trigger. If then you're still not pulling the trigger, let me give you a really simple one. Let's say if the market is up, this is just for example purposes, so it's easy and clear. The market is up at 3 p.m. UK time. I'm going to go long with this size and a $50 stop on the NASDAQ, or 50-point stop on the Dow, whatever, right? So it's very clear. I'm not advising this strategy, but you get the idea. It's very binary, it's very specific. Now, if the market is up and the price comes and it's 3 o'clock and you don't pull the trigger, now we have to dig into why. And this is where this stuff gets interesting. Okay, so going back, I believe this is a fear of being wrong. You need to condition yourself to say, hang on a second, I need, my job now for the next week is to just pull the trigger. I don't care about P&L, so in which case go down the size if you need to go into a demo. My job is not P&L. I'm not focused on P&L. I need to have another target to get over this hurdle before I go back to P&L. So let me recalibrate. My goal and my mission is this, is to pull the trigger on a very defined setup. And if you're struggling to do that still, try this 2-second rule, 5-second rule. Come up with whatever seconds you want. Doesn't actually matter how many seconds, right? If you're a higher time frame trader, maybe 2 seconds, a little bit brief. But the point is, give yourself a countdown and say, hey, when I see that, the clock starts. Maybe 2 is a little bit harsh, actually. It's a bit aggressive for you, but give yourself 10 seconds, right? That's enough time for you to have a little internal dialogue. Should I, shouldn't, shouldn't. 10-second timer. That's when, bang. Now, if you miss it, you've hesitated, and you need to get better at doing that. But the idea here is you see the trigger, you watch the trade set up, you give yourself a 10 seconds, you take the trade. Right or wrong. Now, obviously, you've got stop loss in place to manage your risk, etc. But you want to be in a position where you are taking these things without hesitation And so if you do that over time, then eventually you come out the other side and you go, you know what? I didn't look at P&L. I took exactly what I said I was going to do. Let's worry about P&L in a moment. I feel like I can now pull the trigger despite the discomfort, despite that internal voice, despite all the little reasons why I shouldn't take the trade. I did exactly what I said I was going to do. And that boosts confidence. And eventually that helps you, improve this hesitation. Okay, next one. The revenge trader. Oh, this was me. This was me. I was a revengeful, very revengeful trader, mixed with the oversizing trader is a deadly combo. But as a lot of traders do, you have to get over challenges. You have to, if you want to get to the next level, you want to kick things up a gear. You can't stay dealing with these challenges forever. You have to find a way to get over them. So, revenge trader, maybe this is you. Problem, takes a hit and then spirals out of control. Just gets frustrated. The market, the conditions, the performance, whatever it is. You chase, you oversize, you overtrade, and you want emotional relief. You don't really want P&L. You are feeling angry. This is quite common, actually, especially with traders who are driven, who are ambitious, which you are. That's why you're here. That's why you're trading. Very common for traders to go, I need to get it back. And revenge trading is a little bit of a false title for it, because it sounds like you're out for revenge on the market. You're out for some sort of vengeance on price on the Nasdaq or on Tesla or on yen or whatever. It's not normally like that. I don't know many traders who say I want revenge on that market. They want revenge on themselves because they're disappointed in the way that they've traded, whether it's just genuine drawdown and genuine system slippage or genuine just losing trades happen, right? Or whether it's a slip up in terms of deviating from the plan, not executing you should do. You want revenge on yourself. And when I say revenge, the issue here is, like I've noted down, it's a pain avoidance loop. It's you feel bad and guilt and frustration from not doing so well. And so you push harder and because you want to get back to that feeling and of the price of your equity curve being up where it was, your intraday P&L being up where it was. That feels like that's the goal. And so the goal has now shifted from being a good trader, process-driven trader, maybe P&L focused trader. I'm not so happy about that, but let's say you were, to now being, I need to get that back to where I was because I feel crap about it. And so this is very, very common. So the fix here is this might sound, I know this might sound over the top, but as someone who has revenge traded in his early days, it just has to be done. And often it will trigger from different things. We talked about these triggers before. Maybe it's multiple losses, maybe it's missing a trade, whatever it is. But ultimately, the damage is done after a red trade, right? And so, just for belt and braces, after a red trade, step away. You might be like, I see that's too much, it's too aggressive. I don't need to do that. Fine, adjust to suit you. But the main point we have here is just breaking the circuit. In your mind, you're saying, I need to get the money. I need to get money back. I need to feel good again. And we actually, the narrative is we want to get the trade back. We want to get the money back. We want to get back to where we were P&L wise, but actually deep rooted, it's I want to feel good again about where I was in my trading. That's why very often traders who are up big on the day or up big on the week, depending on time frame you're trading, or say big up okay, let's say on the day, give a low back, that often triggers a lot of traders into revenge. Maybe that's you, because you felt good, your emotion was peaked, it was high, you had a buzz from having that nice P&L, you gave it back, and so the amplitude of the difference in emotion is quite high, as opposed to just sitting there making nothing, not doing much. And so that often triggers a revenge trade. So if you can stop and apply a circuit breaker, pump the brakes after a red trade, a losing trade, step away for 5 minutes and I've put things here like breathe, write down stuff. What's the future version of me going to do? Is this how I want to trade forever? Probably not. And what you're trying to do is you're trying to click back into a logic-based brain that says, hang on a second, pal. What are you doing? You lost a couple of trades. Who cares? It's meaningless in the scheme of how many trades you'll take. It's irrelevant. It hasn't done much damage. If you carry on now digging a big hole for yourself, then you possibly will do damage. Just be calm. Just be easy. And that might be enough. That might be enough to stop that spiral, to stop that kind of never-ending cycle of losing money, then trying to get it back and losing more and getting more frustrated, and it just adds fuel to the fire. It's like someone with a massive jerry can of unleaded just going goosh, 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 and the revenge flames are burning and you're trying to get out of it and you can't. All you end up doing is drinking petrol to make yourself even worse. Not that analogy. There you go. Drinking petrol, the revenge trader. Okay, let's dial things down a bit. So the overtrader, maybe you're an overtrader. This is we third one now, third one or so. Yeah, and this comes from, if we have a quiet market environment or a grinding trend day, I think it's many people's nemesis, or bored, or craving the excitement, or for a lot of part-time traders this crops up in that they have maybe this is you have a window of time to trade where you're working, where you've got other commitments. You sit down and you're like, well, I'm gonna have to trade, I have to do something, I have to click the button, right? And you end up over trading and taking sort of really substandard setups. So the problem is that boredom shows itself out in trades. You have to, oh, just one more trade, I'll just get a little bit more money here, I'll just try and do this. And you're in noise, you're in chop, you're in barbed wire, you're in dirty candles, whatever you want to call it. And ultimately, that causes that death by 1,000 paper cut syndrome. And we've probably all been there, or many of us have been there before. We're just eroding little bits, nothing major. Like you're not into a revenge cycle, you're not into blowing up, not doing anything crazy, but it's these little chip away. And before you know it, you kind of look at your P&L and you go, hang on, that's way more. I've just chipped away a hell of a lot of money there for little tiny paper cuts. And that's only because I've not YOLO'd into stuff. I've not traded too much size. I've not done anything really that I shouldn't have done. I've just taken a lot of crap. I've just got involved in a lot of setups that I really shouldn't have. And I think that if you can identify that, that's quite a simple fix. And here's a good drill. There's different ways of doing it, like I say. But here's a good drill to do: is to limit yourself to, from a day trader's perspective here, and again, adjust depending on the time frame you trade on, but have a 3 bullet drill and say to yourself, you know what, I'm only going to take 3 trades today, and I'm not going to take any more. And so this initially is tough to do, right? It's tough to do because you take the trade, you take another trade, you take a third trade, and you go, I've seen the great setup, and now I've got no bullets left. And that's the test. At that point, you have to walk away because you need to feel the pain of not being able to take the trade you want. So that next time you come into the trading day, you're a little bit cautious and say, I'm not going to waste 2 bullets on chop. I'm going to save them. There's a 1 bullet here. And I want to say 1 bullet for the afternoon breakout or the VWAP bounce or whatever you're trading, whatever market you're trading, however you're trading it, right? And so this is very restrictive and can feel quite claustrophobic, for want of a better word. But what this does is it really helps you accept and respect the risk that you're deploying for each trade. And you kind of say to yourself, hey, it's got to be a grade A setup or nothing. And another way to kind of deal with this, and I find a lot of traders do this, is they take these trades with small size. So these paper cuts are very small, but they add up. And so because the size is small, they don't attach the same meaning or give the same respect. It's a bit emotive, that phrase, but I think you appreciate what I mean. The same respect to the trade that they would do if they were trading bigger size. And so one thing to do, I won't say it because I don't want to. I want to be careful about encouraging people to trade size when they shouldn't do, right? That's your own personal risk-based decision. But one way I've seen other traders do is to say, hey, I'm not allowed to reduce my size. I've decided on a risk allocation per trade, and I can't just go, oh, you know what? Sorry, I'm just going to use a small size and see what happens. That's not a trade you should be taking. And so consider really adding some respect to each trigger pull by 3 trades max, 2 trades max, whatever your time frame is, and also looking at how you're sizing, because you just don't want to be taking like, oh, I'll have a stab, I'll have a go is the worst phrase you can use as a trader. It should be, I have got a good hypothesis here, I can structure this trade soundly, this is how much risk I'm prepared to deploy, this is my potential target, how I'm going to manage the trade. Okay, click. That's the way that trading should be, as opposed to, you know what, I think this market's going to go up here, I'll just do a little bit, click, and then it doesn't. And you erode away all the gains that you've made, or even worse, you just kind of erode away your confidence, which is just as bad, I think. Okay, so next one we've got is the panic exiter, not the city, but the actual the person who is jumping out trades too quickly, person who is has a great and often, you know what, I see this loads. They have a great entry. They're just super good at spotting the great entry, but for some reason, when it comes to exiting, they don't use the same logic. They don't use the same reading of tape. They don't use the same price action structure. They don't flip it on its head. They go, "Oh, I'm going to trade. I'm going to trade. I'm going to trade. I'm going to lose my P&L. I'm going to lose my P&L." And the thing is that you get these great entries and awful exits, and anytime the price goes against you, you're out. And what happens is you end up leaving kind of money on the table. Now, I'm not saying that you always have to hold a trade. For those massive moves like the trader I was saying, giving a kind of props to the beginning of the webinar, who's kind of holding this trade for multiple days, trying to stretch. Maybe that's not you, that's fine. But at the same time, you know that if you're trying to look for an extension move, you're looking for a breakout, appreciate sometimes some trades, the first sign of a movement against you. If you're late into momentum, say you're buying on a kind of high momentum breakout, you know it's already done a full ATR on the day, you know you're pushing your luck, by all means, that's a specific trade that you're grabbing, you're snatching at if you like. But if you've got a theme recurring through your trades where you're constantly panicking, constantly checking out the first sign of a pullback, then it needs dealing with, because the numbers and the maths of your setup, your strategy don't work, because you've got your risk to reward ratio, your reward to risk ratio, however you want to put it. We've got you risking 1 to make 3, or risking 1 to make 5, or 1 to make 2. And you've got your probability of the word I'm looking for, the probability of success. The probability the trade is going to be a winner. And those are the two levers that you pull. And you can't have it where you're just snatching at profits all the time, because no one's got a really high lever when it goes up to 95+%. And so you kind of, maybe you're sitting at 60%, but if you're snatching at profits, in the maths don't work. Anyway, the root cause of this, I believe, is that it can't handle uncertainty, right? It's getting to the point where you see the unrealized P&L and you worry about it going away. Again, it's a little bit like earlier we talked about the amplification of the amplitude of the emotion. I feel great, the trade is going my way. There's doubt the trade is going to go against me. It starts to tick back. You worry about it, and then you pull the plug because you don't want to feel the trade coming back. You don't let the trade mature. And so this is the uncertainty. This is the nature of the market, right? Which is something we can't get away from. And so one thing to do is to have some sort of restriction. I've got a timer that I use, which is like a very simple timer. You just bang it. I don't like having my phone around when I'm trading, so this is a timer. Not necessarily for this, but I think it's an essential for all day traders. And one thing you can do is you can set a 60-second timer. And I say 60-second again, I'm talking about traders who are maybe more active. If you have the urge to close the trade, bang, you smash the timer, you give yourself 60 seconds, and you can say to yourself, with a little internal dialogue, you say to yourself, I can close it, I just got to wait 60 seconds, right? And the thing is with this is that it just helps you, and the reason the timer works is it puts a limit on it, because you've got the internal dialogue going, I want to close it, I want to close it, I want to close it. You go, you can, just wait 60 seconds. Now, my bet is that actually once you've punched that timer, you will then go through the emotions. I want to close it, I want to close it. You'll calm yourself down. You'll look at price and you go, you know what, this is a pullback. I didn't expect price to go from A to B without pulling back a few bars. This is a pullback. This is cool. Now, where would I want to come out of this trade? Do I want to pull my stop to break even? Do I want to peel off half under that level? Do I want to step it up? How do I want to manage it? Do I want to not touch? And then you come up with a more logical approach based on your hypothesis and your thesis and your assessment and your analysis that you did before you took the deal. And so this timer thing is just really a way of going, okay, just calm things down. I feel like the urge to close it. I'm going to punch the timer. Let me just close my eyes for a little bit. Let me just reassess the situation. And if you need to, walk away. Like, walking away is great. And timed exits, I'm a huge fan of this. I don't know why it's not talked about anywhere near as much as I think it should be. Maybe it's a personal thing. Is coming out at a certain time. So in other words, or reassessing at a certain time at least. So you may say, hey, I'm long. I think I've got the low of the day, or I think the low of the day is in. I'm going to come out, I'm going to come back after an hour and review it, or I'm going to hold this for at least an hour. And so what you're doing then is you're matching the time that you hold the trade with your idea of how long you think the trade is going to mature. If you're a swing trader, you might say, hey, I'm going to review this after 2 days, or whatever it might be. And so you're using your knowledge of the market rotation rhythm to say, this is going to take at least an hour to play out. I've bought this, but we're not in a kind of explosive move here. I think we're going to grind higher. I don't want to touch this until the UK session shuts. I don't want to touch this until at least 30 minutes before the closing bell, whatever it might be for you. But being able to do that and putting some sort of framework and restrictions on how you manage the trade helps you go from panicking just because you see price pulling back to calm and listen, an acceptance that you could give money back, you could give the unrealized P&L back, but that's the name of the game. There's never a trade that's going to, very, very rarely, trade's going to go from there to there and give you maximum profits instantly. And one thing also extra to do here is to take P&L off your screen. It's a bit of a nemesis. It can be a nemesis. Now, some people are fine with it, and that's okay. But if you're struggling with one of these things, then I think that it's worth doing, especially if you panic exit, because you unrealized P&L has never serves you. You're watching it. Maybe you're up $800. Oh, I'm up £800. I'm like, oh, £1,200, £1,500. So yeah. Oh no, now I'm down. I've lost 500 just by sitting here waiting for it to pull back. And your mind is processing this, and you see, maybe just use those numbers as examples: 500, 800, £1,000, £1,500, £2,000, £2,200, and then you see it just come back, and it's come back. You're like, oh, it was over 2,000, and now it's under 1,000. And you close it. It's like, well, listen, man, you just start the trade's just getting going. Your full potential might be £7,000 there. These numbers, whatever these numbers mean, doesn't matter. Add a zero, taking the zero off, regardless. And then it's looking at it from a pure logical and trade analyst perspective, as opposed to the unrealized P&L spooking you out of a trade. Okay, let's move on to the next one whilst we've got time. The narrator. So this is a trader who is quite smart, right? Generally, the narrator is an intelligent man, woman. They understand what's going on in the world. They have maybe a good grip of economics. They understand how news affects stuff. They understand the impact of NFP, of Fed, of good global news flow. I have a good grip on that. That's great. That's fine. But the problem is when you bring that into the trading environment, it doesn't work. It doesn't work. Now, listen, if you are a position trader, an investor, that works great because you have an idea. You think, okay, this economy is going to be struggling for the next year, or it's going to grow, or whatever it might be. And you hypothesize, and you put a thesis on, maybe it's a company, etc. It's different, right? We're not investors here. And so bringing that narrative in just really pollutes things. Now, smart traders will look at the narrative and go, is that bullish or bearish, and how's price response to it? That's a tape reader. That's a person who says, hey, this was really bearish news in the market, but we still rallied. Okay, now I see what's going on. I see we're super bullish here. That's a tape reader. It's a price action reader. Whereas someone who's so convinced that something is bad or something is good and trades the story, not the price, and has the should on it, then that bias overrides the setup, and there's like this confusion of this should be going lower. I'm short and it's rallying. It should be going lower, and it's constantly feeding into the narrative and the news flow and all the numbers and all the stuff. And it's not necessarily just news flow. It's, hey, I saw the non-farm payroll number come out. I saw the jobless number come out. I think that's bearish. It's like, fine, that might be what the general feeling is of the number, the absolute number, but price is king. And the trouble is when you try and outsmart the market, this is what causes these moves, guys. This is what causes these. We want to be the person on the other side of that guy. We want to be the person who says, you fools are shorting this because the number's bad and that everything that came out there is super bearish. You're shorting it because of that. I'm buying it because the market is going up despite that. And you're the guys that are trapped, who are covering and panicking and vomiting out the positions, who are going to help us who are long. You want to be on the other side of that deal. You don't want to be on the side of the person who's constantly trading from an intellectual perspective, because the market isn't like that. Yes, there's a lot of intelligence there, there's a lot of resources, a lot of high IQ guys trading, but that doesn't necessarily drive people's desire for money and desire for alpha or whatever they're trying to do. They've got different kind of takes on things. And so something to think about, if you get caught, if you're a type of trader gets caught up in this type of stuff, relatively easy fix, I think, is to really just make sure that you've stripped out any thoughts of price. Now you might be like, yeah, but Mark, I want to trade a kind of hybrid approach where I'm looking at price, I'm looking at the narrative, I'm looking at the bias, I'm looking at stuff. I want to be like a mini Jason Shapiro, right? He has this approach where he has his contrarian trade. He has other ways that he executes his trade, but generally speaking, he likes to see what he calls news failure, which is exactly that. Good news, market sells off. Bad news, market rallies, right? So you might be like, Mark, I want to be that type of trader. Okay, fine. But for now, strip out any element of fundamentals, any news flow, any exposure to that sort of stuff, and just look at pure price. And just look at pure price and go back to basics with the technicals. Are we an uptrend? Do we have high highs, high lows? What are the rotation sizes? What's the typical range of the trading day? What are the normal stuff that you would do? And then come up with some ideas from that. And so when you're then trading, your default might be, oh, I'll go back and just see what the news is like. I just got to see what the number is like. It's like, just relax with it. And hopefully over time, you start to say, you know what? I don't need to be this on point with the news. I do need to be aware and I need to be informed. I need to understand what other traders are looking at, how they're perceiving that, because I don't care apart from I want to match that up with how price responds and say, because look, yesterday was a prime example, right? The person perhaps who was just looking at things on face value says, Iran has launched a missile at Qatar. Wow, crude oil, man. They're gonna block the strait. They're gonna do this. They're gonna do that. This is bad news, right? And just on that face of it, you might be right. Yeah, you might be right. And so you're there buying oil, buying oil, buying oil. It's going lower, it's going lower. And maybe you're right at the beginning, then it starts to go against you, and you're buying it, you get scratching your head going, hang on a second, there's a war in the Middle East here. We've just had US has just attacked Iran's just attacked Qatar, Russia's said they're going to do this. My God, oil's going to spike massively. I'm buying more, buying more. But you don't see the wood from the trees and go, well, actually, in that case, there's a reason for it, in that people perceive that the attack then was maybe the last of it all, and it's less of a violent attack than they expect, blah, blah, blah. But the point is, even without that extra little piece of the puzzle, the market may well have sold off because everyone's seeing the same thing. And so you just don't know how people are responding. You don't know how people are positioned. You don't know a lot of stuff. And so we're very, very careful to get too much of an extreme bias. Okay, let's move on. The oversizer. Oh, this is a good one. I can think of a few traders off the top of my head who are very, very firmly planted in this, at least 1 foot anyway. Problem, of course, is doubling down or increasing size when you've got high conviction without really having a genuine filter for a grade A plus trade. You're like, this feels good, click more. Before you know it, you are well oversized, you're amplified, your fear, your emotions, everything is amplified massively because you've added too many clips on. And so it just ends up being dangerous, because actually you go from being a cool, calculated trader to seeing a play, to taking a play, watching it set up, pulling the trigger, doing everything that you should, to now, bing, you flicked your emotional decision making to the amygdala, right around, amygdala back, front, I think it's the front. Someone will correct me. And then you start making rash decisions. You start doing silly things like holding on to trades. You start not trading it correctly. And basically just more risk makes the execution worse. And so the thing is to say to yourself here, listen, right? I want to size up, and many of you do, and that's good, because that's how you get to the next level. You kick things up a gear. You either say, hey, how do I make more from what I'm already doing? Do I hold trades longer? Do I take additional trades? Not normally the answer. Or do I size up on what I'm doing existently? Normally the answer. Normally. Okay. And you say to yourself, right, I am going to risk an R unit. Can I take 3 losses in a row and still be calm here? Am I comfortable with this? And really reminding yourself that, maybe you need to take a step back from the adding and the increased sizing for now, just to steady the ship. I know a trader who, he's very, very good. He's very, very good at reading tape. He's very good at spotting the moves, but he's also very aggressive. And that aggression is the one thing holding him back at the moment. Now, when I said to him, I said, listen, by all means, let's work on the aggression later. But that's the one thing holding you back. Your entries are great. You read the market well. You spot the levels. You have very little maximum adverse excursion. You've got everything going for you. But then you screw it up because you add too many clips and you're really top heavy on the deal. And one little move against you ends up wiping out the day's profit. Because you've got the desire for it to shoot off in your direction. Yeah, now and then you might get it. But ironically, you're so heavily sized up that the minute it goes in your favor, you take the whole thing off. You think you're a hero, but in reality, at that point in time, when you've added to the size, you've got such a big, heavy, top heavy clip on, you then so sensitive that actually the efficacy of the edge just crumbles. And so saying to him, right, go back to basics, Let's come up with a fixed position size, no ads, no messing about, no adjusting it dynamically for now. Let's just steady the ship, put some numbers on the board week after week after week, put some numbers on the board, right? Now, when you've done that, we add in another parameter that says, okay, there's a little bit of flexibility. I can do 1R, I can do 2R, and I can adjust the dynamically how much risk I'm prepared to take. And so you slowly introduce some flexibility with risk and with position sizing to try to get into your head that actually, you know what, I just need to be calm. Because you know what, I have to say, most traders who struggle with this are damn good traders, but they want it too quick, they want it too fast. It's like, well, let's come up with the aggression side later. Just do this first. We can always increase your clip size by a smidge on the initial clip, remove that emotional ad, hold it a little bit cooler, a little bit calmer. Let's just steady things out, steady things a bit. Later on, we can add a very strategic ad, not an emotional ad, and then you can start to size up like that. So think about this. Think about, can I take multiple losses in a row and still be calm? Can I take a trade? Can I peel back my impulse and desire to just more, and play the medium term game? Okay, let's go the other side of the coin here, the undersizer. Maybe you're an undersizer. The problem is, gets the setup right, but just too gun shy, just too scared to pull the trigger with size they want to trade. Now, I'm not saying that if you're how much you should risk. That's your prerogative. That's your decision. That's entirely a personal decision based on many factors, right? But what I am saying is, if you have already said I'm going to risk X on a trade, £500 on a trade. You've already said that. You're happy to do that. Your pot allows you to do that. Everything says I'm comfortable doing that. And again, add a zero, take away a zero to suit you. The size of the trade doesn't matter. At that point, if you then at the last minute go, I just risked 200, then there's an issue. And the issue comes because you're scared of losing and you're playing not to lose. And the sad thing is, if you do that, then ultimately the equity curve just get ground lower and ground lower and ground lower and ground lower, and the trades are driven by fear rather than logic and experience and judgment. And the problem is, it just, as I said here, it erodes confidence. You don't get any growth. Now, I haven't played poker for many years, even though I have my poker chips here to allocate risk capital during the trading day. That's by the by. But I know from my limited experience at poker that if you play super tight, i.e., you only play the very best hands, then the other players will see that. They will know you only play the best hands. You're playing not to lose. And you think, well, if I just play the very best hands, then I'm going to stay in the game longer and I'm going to win. Other players will see that and they'll know exactly when you've got a good hand and when you haven't. And you're easy to read and you end up losing. So by playing not to lose, by playing super tight, you end up not losing. Now, the analogy doesn't quite work out with trading with the best hands. I think you should play the best hands or the best setups in trading for sure. But the kind of idea of playing not to lose, very apt in trading. Many traders want to trade, but they want to take the risk. Now, if it's not the game for you, that's fine. But also, and if you want to keep your size low, that's fine too. If you say, no, I don't risk us this amount of money, and you do that, it's fine. You're not undersizing. You're just adjusting, you're calibrating your risk based on your specific requirements and situation. That's good. That's exactly what we should do. But if then later in the heat of the moment, you're playing too small, you're undersizing, you're backing off, then you need to reassess and go, why am I doing that? What am I concerned of? And so one way of kind of fixing this, a drill to fix this, is to really commit to your sizing plan and say, hey, what's my risk in pips, percentage, dollars, whatever it might be? I prefer our units myself, but hey, stick to the plan. I'm happy to take this risk. I've calculated this. I'm comfortable with this. This I may well lose, and I probably will, but I want to be committed, and I'm not bothered about the P&L. I want to push the pedal down. I want to click the button on this size. I've decided this. I'm a big boy. I understand the risks. I know what could happen. The likelihood is I lose this one because that's the way the market operates. What if I'm holding a trade too tight? It goes, hang on a second. This guy wants too much. We'll stop him out straight away. But you want to build the process, and it's not the results, it's the process. Okay, let's move on. System hopper. The problem, new strategy all the time, getting seduced by something else, half-built bridges, all the analogies we've used before. And very often what happens with this trader is, and maybe this is you, less common I think, is that you have a couple of red trades, you try something else. A couple of red trades, you try something else. Rather than saying, hey, you know what? I have something here. Looking yourself in the mirror and going, actually, I have edge. It's not where I want it to be yet. I still have work to do, but I have edge. I have something here that I want to push on. I want to pull on the thread and get as much out of it as I possibly can. And that's the honest conversation you must have as a trader, rather than, this doesn't work, I'm going to find an easier route up the mountain. And you go and look and you say, oh, that's an easier route up the mountain. You get around the back side of the mountain, the damn thing steep, is covered in rocks. It's the same route. The mountain's still as high as it is. You just got different challenges to come, whether you're trading mean reversion, trend, momentum ignition, day trading, swing trading, same scenario, different day, right? So be calm, be cool, look at your edge clinically and say to yourself, hang on, I want this quick, but the impatience is going to ruin me. If I start to try and rush this, then I'm gonna end up just spinning off. You know, if you've ever driven a car around a track, right? You drive a car or ridden a bike around a track, you know what I'm talking about. You want to take the corner as quick as possible and get around as fast as possible. But if you go barrel into that corner too quick because you're impatient, you just skid straight off. You just bike will go from underneath you. You'll just skid off whatever vehicle you're in. The same with trading. You've got to take your time. Yes, you can try to be and put the throttle down in the right moments, but actually, you know, impatience is often you look at it and say, well, I'm optimizing, but actually you're not. You know, it has to be taken at that pace to even get around. And so the fix here is to do the 40 trade process. We've talked about this many times before. I still think it's a great thing. As Henry came up with this as a good trader. 40 trades, 30 trades, whatever it might be. The idea is you pick one system, one setup, and you just log a specific amount of trades. 40 trades, depends on the frequency. If you trade once a month, don't do 40. If you trade 10 times a day, 40 is fine. But the idea is that you just kind of say, listen, I'm committing. You know, I'm marrying this system, if you like, and you know, it's going to take a lot for me to just dump this system. I'm going to run with this. I'm going to put my effort and time into this. I'm not going to get distracted before I make a judgment on it. And that's something that's really, really helpful, I think. Okay, next one, last one thing. No sniggering at the back. The fiddler. The problem, always adjusting, always tweaking, always managing. You know what I'm talking about here, ladies and gentlemen. When you are in a trade, you are constantly making little adjustments. You're adding a clip, you're taking off a clip, you're moving your stop, you're moving your target, you're doing this, you're doing that. You're constantly reassessing based on one little ball. It's gone up by 10 points. Oh, it's gone down by 4. You never let the trade play out. You don't let the trade pay you. The market wants to pay you for being right. If you're right, sit on your damn hands. Don't fiddle with it. And you end up actually the fiddling. Should I use the better word here? Maybe I should have the meddling. The meddler, the fiddler. Fiddler, what's the other? Riddler, the fiddler, the meddler. Meddler's probably better for trading. So listen, we know, all jokes aside, guys, we know what happens here. You have a great trade, great idea, end up screwing the damn thing up because you're meddling with the traders that's going your way. You move the stop too tight, you take some off, you do this, you do that. And if you've actually stuck to your plan and said, I want to go long here and close it in the day, it would have been a good winner. And so it's that addiction to being, control freak. And often that ruins the edge. And again, it's a frank conversation to have with yourself. You look and you say, listen, if I hadn't touched any of these things, let them run to fruition, I'll be in a much better position. You have to look at yourself honestly and go, I'm not very good at micromanaging. So what? I prefer money. And that's the conversation you have to have. What do you prefer to do? Micromanage and feel like you're in control, or cash in your trading account? I mean, it's a pretty easy question. And so if you're someone who's constantly meddling with stuff, then let the trade play out. Hold it for a while and say, you know what? I'm going to run a challenge, a set and forget challenge. 1 trade a week, no interference, 1 trade a day, whatever time frame you're on. I'm not going to touch it. Target or stop, target or stop. Again, like all these things, the focus then becomes that as opposed to P&L. And if you can get good at doing that, you run it for a while, you might say, you know what? Actually, my results are pretty damn good. Jeez. All right, well, the proof is in the pudding now. Logic's there, emotions need to take over. Okay, the sim god. This is the final one. This is a problem I see with a lot of traders who, are trading on some kind of demo, whatever that may be, some kind of paper trading account. Now, I've always said if you're trading on a demo, And again, this is a personal thing. I'm not here to tell you how to risk your money. It's your money. You do what you see fit. You understand the risks involved in trading. But I think you use a demo and use a sim to learn the platform, to learn how you adjust the ticket, to learn how you move this, do that, do the other. Maybe you understand the sizing. Like I said at the beginning, if you're new to trading, absolutely use a demo to get used to what the tickets mean, what sizing means, how much you lose, what can happen. That's a safe playground. But assuming you're past that, the sim has very, very little value because you're taking out the psychological element of having skin in the game. And so, brokers like Pepperstone allow you to trade very, very small so you can keep some skin in the game. And the idea is that you make it realistic, right? Because many traders, they're brilliant on sim. And that's assuming they're using sim correctly. Some traders are punting away on sim with like £1 million accounts. They haven't got £1 million they're going to use in cash, and then they go to their £10,000 account and go, well, it's very, very different. If you use a sim, then you should mirror how you plan to trade your cash account. But assuming you do that, many traders do very, very well in sim and not live. Now, the issue becomes here is when you have the attachment to money. So what you're really doing, you're disconnecting the true edge of a trader, which is to be able to be cool and calm in the face of realized P&L, unrealized P&L, all that type of stuff, right? Because that's what pulls your levers and your strings. If you look back at all the previous 9 that we talked about, that's all relative to money. Money's the thing that fuels that. So it's your relationship to risk, and you've got to ask yourself a question, right? And this is a frank question: is trading for you? If you can't handle risk, if you don't want to lose money, if you can't lose money without losing control, or if it's something you absolutely hate, then it's probably not for you. But if you can get comfortable with it, you can understand that this is the way it is. You lose some, you win some. Then trade with tiny size, right? Trade a very, very small size. Keep the process the same. Imagine it's another 0 on it. So in your mind, maybe log it in an Excel sheet with an extra 0, or even better, just log the R unit and focus on your execution, not your P&L. So don't worry about making £2. Say, okay, I made 2R, I made 3R, I lost 1R, right? And maybe it's £1, maybe it's £2, maybe it's 50p, whatever it might be. But the point is, you actually got some skin in the game, and you can slowly build that up. Then that's what you want to do, and you want to build the confidence through reps. Okay, so key takeaways before we do some Q&A, guys. Mastering the inner game was what we talked about today. Now you've got the 10 trader types that I think are the most prevalent. Hopefully you've spotted yours. Own it. Don't let it ruin the show. I've put here are most trading areas. I don't think are strategy problems. I say that, but a strategy is super, super important, right? It's how you execute. There's this difference between what you know and how you actually execute, and often that shortfall is in here. And so an easy win, if you like low-hanging fruit, is to fix this before you even look at strategy stuff. And as I say, each type I think has a fix. No guarantees. It's something to try, something to explore. And what I want you to do, if you like this type of stuff, is to start with if you think this is value, is to start with the type you think resonates with you the most, and then run with that. Are you a fiddler? Are you an oversizer? I'm such a schoolboy. Are you an oversizer? Are you a revenge trader? Right? Which one are you? Which is the worst? Which is doing the most damage to your trading? Identify that. And even if you don't use the drills that I've kind of put out there as an idea to move forward with, come up with your own and come up with a plan of action over the next couple of weeks or however long it takes to fix that, because that's probably the one thing holding you back. I wanted to mention this because I haven't mentioned it for a while. I have a discipline tracker. If you go to tradersmastermind.com, which is my website, it's free. It's a Google Sheet. If you've got a Gmail account, it works perfectly. This is a way of tracking your discipline. And why I mention this today is that if you are an overtrader, a revenge trader, you can load this up with kind of some of the ideas, the habits that you want to track. And you can get better each week, each month, and you can kind of visualize that progress. Totally free. You're going to just put your email address in. You then get my daily email, which I send out each day. You're free to unsubscribe from it if you don't have to have that tool. I do put a lot of effort into it, but I want to mention this because this has changed a lot of traders. It's helped out so many traders. It costs absolutely nothing. It looks quite nice as well. It's quite a pretty design thing. And if you haven't got that, this is one of the things to help you out. Do you need this? No. Use pen and paper if you like, but I wanted to mention it. Okay. So let's go to some Q&A. If you have any questions, ladies and gents, I will do my very best to help you out. If I can't, I will I always say I'll guide you to somewhere that can. I don't think I've been caught out with the question. The question that caught me out was which trader uses range bars. So I couldn't think of him. And I still couldn't think of him. And I said I'd email the guy. I still couldn't think of him. So I have to apologize to him. Okay, let's get to these questions, guys. Hello, Mark. I'm new to trading. This is Ilian. Hello, Mark. Oh, by the way, before I get to these questions, we have a new, some things need to be sealed off and signed off first, but I've got a really exciting series for you next week, the July, 5 weeks in July, you lucky things. We're going to talk about all sorts of really interesting stuff. This is the stuff I really love to talk about. Data-driven decisions. We're hopefully going to be able to talk about building this kind of playbook with various different things in, so you can kind of mean reversion, momentum ignition. So you've got that multi-layers to withstand different things. Confirmation that where that goes wrong, where that goes right. It's really, really tactical and really kind of, if you're in the trenches and you're trading, then I think you'll enjoy what I've got in store for you in July. So look out for that and the email. Okay, so Ilian, how long we got? We've got some time. Ilian says, I'm new to trading. I've been watching your webinars with great interest. Thank you so much for your valuable insight. Let me move you here. One area I'm struggling with is building a solid plan for entering trades. I noticed you mentioned Al Brooks. Is that him? That's him, innit? In your session, do you think his online video course is a good option, or would you recommend a different resource to help me build my strategy? Thanks in advance for your advice. Ilian, do you know what I think? The thing is, with there's so much good stuff out there, right? Free stuff out there, premium stuff out there. And the one thing when you're buying a course is that you tend to be more committed to it. You've parted with money and you tend to be more committed to actually reviewing the content. And ironically, the more you spend on it, the more commitment you have. If you've gone out, that's why people, in some of these top universities stick it out rather than people who buy an online course, right? Or just watching YouTube. So there's that. The question you had was, do you think it's a good option? Listen, I like Al Brooks. He's been on a podcast. I've interviewed the guy. I like the guy. Personally, his books are a bit heavy for me. I know others who say the same, but they got great value from it. He has a very specific style. If you are comfortable with his style and you like it, then you go deep as you can, you learn as much as you can, but you commit. Not this half-built bridge that I talked about, where you go, I quite like this. You go, I like his style. I want to learn as much as I can from him. I'm going to commit. I'm going to push forward. I'm going to read his books. I'm going to do his course, whatever it might be. I think that's the way to do it. But if his style doesn't resonate with you, then you'll just end up flipping and flopping. So maybe an optimal way to start is to pick up some of his books. I think he's got 3 big books like that. Going to cost you less to get going. It's reasonably expensive. It's going to cost you less than his course, I think. I don't know. And then if you like it, maybe you can upgrade to his course. Again, this is my opinion on stuff. I say, if you came on the podcast, have a listen to my podcast episode with him. You can get it from the website or Spotify, Traders Mastermind. Enough of the plugging of my free stuff. Okay. Hi, Mark. Thanks for the great content. As always, appreciate it. Zach, how do you deal with taking setups when you are up a decent amount on the day? How do you choose whether to lock in the gains for the day or to press your method? Thanks, bro. Zach, good question. Personal, very personal. Here you go. Here's how you do it. And here's how I like to do it. I imagine myself giving back X amount. Am I okay with that? If I'm okay and I think I've got edge, I press it. If I'm not, and I think, oh, you know what, I'm up X. If I ended the day half X, I'd feel like crap. Then I lock it in a little bit higher. So I think that just doing a little bit of mental rehearsal on future mapping and saying, hang on a second, I don't want to stop because I feel like I'm in tune and the market regime is right on point. I'm on point. Things are looking well. I want to press while I have edge. Absolutely, I'm a big advocate of that. And anyone tells you otherwise, I think is incorrect. But fine. But at the same time, you have to balance it with this mindset and psychology of how you feel if you gave back X. Now, one thing to do is to have a high watermark and say, look, a trailing stop on your P&L. Let's say you're up. You run an example here, £1,000 in a day. You say to yourself, right, I'm going to end the day max worst case scenario up 600 and give back £400 on my day. Or maybe it's okay for you to give back 200. Or maybe you go, no, what, 1,000 is not enough for me. I'm not interested. Maybe you say, actually, I have to be up 2 before I even consider that. So maybe you have a high watermark where it comes in and then you ratchet it up. So, up to 1,000, you're allowed to give it all back because you don't feel like it's a problem. And maybe zero. After 1,000, maybe then say, you know what, I'm not going to go back home with less than £600 up on the day. It's a personal thing. It's a balance between pressing your edge when you have it versus not trading when you've got a decent hot environment. Um, Xerxes, he says, can we see the fix for the sim god again? Yeah, you can, Xerxes. What did I put on the old sim god? Trade with tiny size. Keep the process the same. So the idea here is you make the jump from sim to live much less of a jump by saying, hey, maybe you want to trade £10 a point. That's what you want to trade. And rather than going from sim to £10 a point, you go sim to pound a point, 50p a point, whatever it might be. So you still do the process, and so you kind of try to make the transition a little bit smoother. And again, you're focusing on the confidence, you're focusing on the performance rather than the P&L. Gary says, that's a superb session. Thank you, Gary. I wonder if at some point it might be worth doing a webinar on coping with unplanned trades and the FOMO associated with this, or the regret of not taking an unplanned trade that would have worked, but it may not have passed your criteria for taking a trade. The regret at not taking an unplanned trade. There's 4 quadrants. You've got profitable trade that was planned, unprofitable trade that was planned, profitable trade that wasn't planned, unprofitable trade that wasn't planned. The worst case scenario is you take a trade that wasn't planned and you lose money on it. Second worst case scenario is you take a trade that wasn't planned and you made money on it, because that reinforces behavior. Now, caveat, Gary, caveat, as a discretionary trader, you need some discretion. I'm a big advocate that you have to have some discretion in the way you trade. Not mechanical trading, you're not trading literally an algo X plus Y equals Z. And so there is some discretion, but again, the plan should have that built into it. And you say, hey, you know what, if I see this, I take this, and I'm allowed to kind of buy the close, or I'm allowed to buy the open, or I'm allowed to kind of buy intrabar. And so the unplanned trades shouldn't be unplanned. If it's not part of the plan, you shouldn't take it. The pushback is always, yeah, but I'm a discretionary trader, I need some discretion. The discretionary element needs to be baked into the plan. So you might have looser rules, but that allows you to be a little bit more dynamic with how you approach stuff. Diedrich says, I have a really problem with set a hard stop. How shall I fix that? Diedrich, do you mean a hard stop on the trade? It's a habit you've got to build. Just stick it in. Even if it's a wide stop, just get it in. Habit. Don't stop. Don't stop. Let me tell you this, Diedrich. Many, many years ago, I put a trade on the DAX many years ago when the leverage was very, very different. You could size up massively. And the trade, something came out in the market and the trade shot up massively. I was long, so heavy, way too heavy than I should have been for the size I had, but it was a huge move. And I went to close the trade. I couldn't close the trade. Something wasn't working. Platform was down. Something, I couldn't close it. Just sitting there spinning. And I watched the market go all the way down, give that back, and go all the way low, all the way low, all the way low, all the way lower. And I felt absolutely sick. I was about to wipe out. It was a massive move for me. Eventually, it came all the way back. It all came back online, and I came out for like a couple of grand loss. It was, scratch loss basically. But the point is that yes, that went in my favor in the first time, but that could have really made me think, do you know what? Geez, that could have just wiped you out. Something went wrong, platform went down, power cut, and a power cut the other day, stupidly, actually wasn't a power cut, it's some tripping things. But by the by, all these things happen. So even if you struggle with putting a stop in from a perspective of keeping the risk managed, put one in for emergency protection. Like if you're in a trade, Diedrich, and you're in a full size clip, and then you can't get out of it because something's gone wrong with your machine, or the power goes down, the internet goes down, you're scrabbling, and some news comes out, especially at the moment with the headline risk, you could be wiped out. And so get really put your kind of brain into gear and say, hang on a second, I'm taking this seriously. I have to put a hard stop in. Now, fine, you put it wide at first and drag it up. I think that's okay. You don't have to think about, oh, well, I'm going to put it on this level. Just have a fix, like, okay, I have 30-point stop, or $30 stop, or $300, 300-point, whatever time frame you trade, and just get used to sticking that in. I hope that helps. Rob Ribeiro says, brilliant, Mark. How you doing, Rob? I discovered that I'm a bit of some of the different trader types. Some work for me to do, thanks to the fixes. You're very welcome, Rob. And if you feel like you have a foot in multiple camps there, pick the one that would be the biggest win for you if you fixed it. Um, Oh, some good advice here from Mr. Winthorpe. I love your avatar, mate. It might be your real name, and I'm pretty sure it's not Trading Places, but maybe it's your real name. This is cool. If you're going to look at Al Brooks, take a look at Thomas Wade and Max Price Action Trading System on YouTube. They're Brooks type traders, but much simpler to learn from these guys. There you go. That was Thomas Wade and Max Price Action Trading System on YouTube. So if you're looking for something that's similar to Al Brooks, then Mr. Winthorpe has a recommendation for you, and I guess it's on YouTube. It is going to be gratis. Eliane says, heart. He loves you. He loves you. Louis Winthorpe. Victor says, quality stuff. Thank you, Victor. Appreciate that, pal. Scott says, hi, Mark. I suffer from hesitation and panic exits. In part, this is because I'm under pressure to pay bills, so I fear of losing and snap at small wins. I'm happy with my strategy. The problem is me. I feel that stepping back for a month or reducing size would help me reset, but I don't have that luxury. Do you have any thoughts or advice? Thank you. Scott, you're in a very difficult position, pal. I'm not going to sugarcoat this. When you have the pressure to put food on the table, to do the stuff that we all need to do, and that has to come from the market, unless you have this is, again, no advice here, personal stuff when it comes to this. I'm not a financial advisor, but from a trader's perspective, it's very, very difficult unless you have a cushion, a decent cushion in the bank, or you have some other form of cash to demand that the market pays you. The market doesn't deliver in a linear fashion. It's very 80-20. You might have months where nothing happens. You might have a month where you kick it out the park. And that's not really, it doesn't really align with the day-to-day stuff. When the old mortgage company says, pal, I need your money, your gas bill is due. And so you're in a difficult position. Okay, here's something to consider. And again, I'm no way qualified to give this talk, but I will tell you what I think, and you can take it or not. Your job is to build a cushion. And so how you do that, whether you do that and say, hey, I'm going to trade, I'm going to kind of find the opportunity I think is right and push the throttle down and push hard and try to build a decent cushion so I don't feel like this, so I don't feel like I'm struggling every day to make something and trying to get blood out of a stone and I'm snatching at profits and all this stuff, and it's forcing you to trade differently. If you could approach the market and say, hey, right conditions, right time, now is the chance for me to build a 6-month, 1-year cushion. I'm going for it because if I don't get this, I'm struggling. That's one way of doing it. Or you find something else to do in conjunction with it and say, right, trading, fine, but I need a cushion. I can't trade clearly and concisely and with a clear mind when I'm worried about how much each individual trade is making, because it has much more of an impact. I know what you're going through, Scott. You're there. You see the market going up. You're like, hey, I've got a couple of days before I've got to pay my bills. I'm up my bills amount. The trade's still going. Of course, you're going to snatch at it, because the downside of it going against you means you haven't got enough to pay your bill versus actually holding it and maybe making a bit more. Very, very difficult for that to make work versus, hey, the trade's up nicely. I think it's got loads more in. I don't care if it comes back because I want this to work out 100 times, this trade to work out 100 times in a row. Okay, Mark King says, thanks, Mark, for the valued insights. Appreciate that, pal. Always giving growth to this journey. Much appreciated. Now you are appreciated. Thank you for coming here. Zach says, thanks for response. Question: after a day trading session, sometimes I feel really tired, even if I haven't taken many trades and I'm green. This doesn't change. I just feel mentally tired from the discipline and focus used. I trade for only 3 hours ish plus 1 hour for the market. Do you have any methods for restoring this mental energy and focus? Do you know what, mate? I'm with you. If I sit there watching stuff, obviously if it's busier, I get mentally fatigued. It's a lot of effort. Don't underestimate the effort you're putting in. You've got to watch the market. You've got to manage yourself. You've got to manage your risk. You've got to wear all these hats. CEO of your trading business. You've got to be chief risk manager. You've got to be analyst. You've got to be execution trader. You've got to be all the stuff. and it's very, very difficult. So I don't know if you do this already, but exercise really helps me. I have a routine where I trade the US session. So I will mornings generally at the gym, or if I'm not at the gym day, I'll have a walk. Some exercise just helps me stay focused. I like saunas, I like cold plunges, that type of stuff. Huberman if you want to go into all that. But I think if you just make sure you're eating clean, make sure you're exercising, and this is dull stuff, and just accept sometimes you are gonna be absolutely goosed. You're like, God, man, I can't even see the price because I'm so goosed, and just accept it. And try and do as much as you can to manage your resources, manage your focus, manage your effort, manage your attention, manage your mental energy, but also be accepting that this is a very, 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 very tasking game cognitively. There's a lot of cognitive load going on. And so sometimes you might have to walk away, take a bit of a break. Can you kind of walk around the block? Can you do some push-ups to give you kind of another hour worth of focus? But sometimes you can't anymore, and you're done. And you go, you know what? I'm goosed. I can't risk anything. I am the edge, and if I'm not an engine running sweetly, then I can't trade it. I think that's everybody, guys. Thank you very much. Right, take care, ladies and gentlemen. Thank you for your questions and support, and I appreciate you all. Keep the risk managed. I hope that's helped, and we shall see you again next quarter. Don't forget, quarter end. Lots of shenanigans going on. Take care. Bye bye.